Hello dear traders, I'm Anna Kasatkina and you're watching the latest economic calendar on Insta TV. At the beginning of the next week, the following macroeconomic statistics will grab traders' attention. On Tuesday, the UK will publish the industrial production data for September. The consensus estimate calls for a modest increase by 0.1%. Let us remind you that the UK industrial production declined by 0.4% in August compared to July, while the expected pace was 0%. This drop was caused by a fall of oil and gas output, as drill activity in some fields was suspended due to maintenance operations. At the same time, the UK manufacturing output grew by 0.2%. Depreciation of the pound amid the Brexit results was favourable for the British manufacturers, as their goods cheapened for consumers abroad. Nevertheless, the monthly pace of output growth did not meet expectations in August, which called for an increase by 0.5%. On Tuesday, the whole world will eagerly await the outcome of the spy thriller called the US presidential race. The two main questions are who will win and how the markets will react. Let us try to answer. Some months ago, odds of Democratic candidate Hillary Clinton winning the election were 65 to 70%. However, on the back of her health problems, the FBI's spy games, and an active electoral program of Trump's camp, the odds have turned 50-50. How can the election results influence the markets? Historically, indices always grow ahead of election and fall after it, regardless of an outcome. Bearing in mind that the S&P 500 is poised for a correction, we can say that this time the tendency is likely to prove this rule. The election can have a profound impact on the oil market. Clinton advocates development of the alternative energy, so if she wins the presidential race, funding and subsidy assistance to oil companies can be reduced. On the other hand, Trump supports traditional energy sources, so investments in oil production can be increased. Anyway, it will all depend on how the winner brings its election agenda into action. On Wednesday, China will publish the Consumer Price Index for October. The reading is expected to have risen by 2.1% on a yearly basis. Let us remind you that inflation in China accelerated significantly in September. Prices added 1.9% after rising by 1.3% in August. Meanwhile, economists anticipated an increase by only 1.6% for the mentioned period. On a monthly basis, consumer prices in China gained 0.7% in September versus a rise by 0.1% in August. Besides, Germany's factory orders and Switzerland's consumer price data will be revealed early next week. These reports are due to be published on Monday. On Tuesday, China will release a trade balance report. On Wednesday, the People's Republic of China will reveal its producer prices statistics, and the UK will publish a visible trade balance report. And this concludes the calendar of the latest financial events prepared for you by Insta TV team. Thank you and see you next week. Bye.